Now speaking, Tim Foote, Vice President, Investor Relations, John Chen, Executive Chair and Chief Executive Officer of BlackBerry, and Steve Rai, Chief Financial Officer, held a quarterly earnings call to discuss the company's first quarter performance in 2024. The call was available to the public and a replay will be available on the BlackBerry website. During the call, they made forward-looking statements based on estimates and assumptions that are discussed in the company's annual filings and MD&A. They discussed non-GAAP numbers and provided a reconciliation between their GAAP and non-GAAP numbers in the earnings press release. John Chen discussed the business update while Steve Rai reviewed the financial results. After the discussion, they opened the call for a brief Q&A session. Now speaking, John Chen, Executive Chairman and Chief Executive Officer. During the quarterly earnings call, it was revealed that revenue for the IoT business unit was $45 million with a strong gross margin of 80%. Two main factors caused this revenue to be lower than expected: delays in the rollout of QNX development seat licenses due to customers prioritizing software-defined vehicles, as well as the macro environment impacting regional production volumes and royalty revenues. Despite these issues, the company remains confident in their ability to win new designs and meet the full-year revenue consensus for IoT. QNX has secured 7 design wins in auto and 7 in general embedded market verticals, as well as investments in go-to-market partnerships with Cerebrums in upstream security. In the cybersecurity business, revenue for the quarter was $93 million, representing 6% sequential growth. Billings grew 14% sequentially and 37% year-on-year, with 2 large potential deals in government entering the pipeline. Gross margin improved to 60%, with ARR declining and DBNRR stabilizing at 81%. The company closed deals with Shared Services Canada, Transport Canada, the U.S. Special Ops Command, the U.S. Navy, the U.S. Army Corps of Engineers, the White House Communications Agency, the U.S. Transportation Security Administration, the French Ministry of Defense, the German State Police, the Netherlands Ministry of General Affairs, the New Zealand Ministry of Foreign Affairs, the British Transport Police, John Muir Health, Kaiser Permanente, and Hartford Healthcare, and a number of leading international banks. Lastly, the company closed a deal with Key Patent Innovations for the sale of the non-core portion of the patent portfolio, with an initial $170 million cash payment and further payments up to $900 million. Now speaking, Steve Rai, Chief Financial Officer. Total company revenue for the first quarter was $373 million. Of this, $45 million came from IoT, $93 million from cybersecurity, and $235 million from licensing and other services. Software product revenue made up 85 to 90% of total revenue, with professional services forming the balance. Recurring software product revenue was approximately 90%. The licensing and other revenue included $17 million from pre-existing arrangements and $218 million in patent sale revenue, which will be revealed more extensively in the 10-Q. As part of the transaction, $147 million in intellectual property assets were reclassified from held for sale to cost of sales on the balance sheet. Gross margin for the quarter was 48%, 22 percentage points higher when excluding the patent sale. Non-GAAP operating expenses for the quarter were $145 million, not including fair value expense, amortization of acquired intangibles, stock compensation expense, and restructuring expenses. Non-GAAP operating profit and non-GAAP net profit were both $35 million, while adjusted EBITDA was $41 million. Total cash, cash equivalents, and investments increased to $578 million at the end of the quarter due to cash generated in the patent sale. Net cash from operations was $99 million. The company remains selective on potential investments and committed to reducing EPS loss and operating cash flow usage by the end of the fiscal year. Now speaking, John Chen, Executive Chairman and Chief Executive Officer. BlackBerry recently announced a strategic review of their portfolio. They believe that executing against their operating plans for both their business units to address their large and growing market opportunities, in addition to capitalizing on the convergence of cybersecurity and the IoT, will generate significant shareholder value. The board and management are also considering alternative approaches for delivering greater shareholder returns, such as having the two businesses operate as standalone companies. Investment bankers Morgan Stanley and Perella Weinberg have been engaged and an internal program management office has been established. The review is still in its early stages, but progress has been made and the team is focusing on completing the process as quickly as possible. No further updates can be provided until the board approves an outcome or terminates the review. Robert W. Baird & Company analyst Luke Junk inquired, "How confident are you that the delays in the launch of new programs are solely due to customer software-defined vehicle reviews, and should we be expecting the lower end of full-year guidance?" John Chen replied, "In response to the question about design delay, we have included $640 million of the project in our backlog that we announced. We have already won the design and are confident in our partnerships with these large customers. There may be some minor shifting of time frame, but we do not expect any significant delays in the project. Tim Foote replied, John, our outlook would be toward the bottom end of the guidance. John Chen replied, Tim has reviewed the consensus number and our forecast range, we are comfortable with it. I do not know what is at the high or low end. John Chen replied, I believe that the consensus number provides a reliable estimate for now. Robert W. Baird & Company analyst Luke Junk inquired, John, could you comment on the engagement level since IV's GA release? What has surprised you in the first month post-release with OEMs and Tier 1 partners? John Chen replied, we're seeing a high level of interest in our IV solution, with many customers opting to take part in a proof of concept, POC. Our competitors are not other firms, but the customers themselves, as they consider developing their own data and analytics solutions. Once they see the simplicity and breadth of applications of our platform, which is like an app store for the car, many decide that IV is the right fit and move forward with us. Canaccord Genuity analyst Mike Walkley inquired, Tim and John, what solutions are the multi-year government contracts choosing to drive fourth consecutive quarter of billings growth? John Chen replied, we have seen stabilization of our SME churn rate, have integrated our Cylance product line and are now winning bake-offs. Renewal rates for used customers are trending up nicely and we are winning new logos in the SMB market thanks to our channel partners. We also have growth in our ad hoc critical event management and secure communication software, which have high renewal rates and we are winning new customers. All four components of our cyber offering are building momentum and addressing pain points experienced previously. Canaccord Genuity analyst Mike Walkley inquired, what revenue uptick do you anticipate as new design wins turn into production? John Chen replied, we anticipate that our design win will generate revenue from the sale of development seats and professional services. We expect these initial revenues to be realized within 3 to 4 years of the start of production. Additionally, given increased competition from China and other Asian countries, we expect this timeline to accelerate. The $640 million in royalties we have forecast does not include revenue from development seats or professional services. We are confident that we will realize a large portion of the $640 million as well as continued growth. Canaccord Genuity analyst Mike Walkley inquired, could you provide some additional detail on the revenue projections from the licensing sale? RBC Capital Markets analyst Paul Treiber inquired, John, can you explain why the revenue recognition on the patent sale is higher than the cash received? John Chen replied, my accounting team has determined that our revenue is constrained. I'll let Steve explain the details and how this came to be. Steve Rye replied, sure. We received an initial payment of $170 million and there is a fixed amount due in a few years, plus a royalty component. The fixed amount is discounted to present value, and only a small portion of the royalty component will be recognized in the near term with the rest recorded in future periods. RBC Capital Markets analyst Paul Treiber inquired, what has been the process for determining the earn-out and royalty payments? Steve Rye replied, the accounting framework doesn't allow us to accurately assess the full value of the stream over its remaining period. We cannot consider it as fair value due to the risk weighting and other factors that go into the calculation. RBC Capital Markets analyst Paul Treiber inquired, what were the headwinds to cash flow this quarter, excluding the patent sale? Steve Rye replied, at the start of this year, our usual profile was to have net cash usage in the first half. If you factor out the IP sale, it's comparable to what we usually experience over the course of the year and then generate cash later on. John Chen replied, Paul, last year's bonuses resulted in a significant increase in VIP payments and compensation. RBC Capital Markets analyst Paul Treiber inquired, what is the outlook on the arbitration regarding the patent sale? John Chen replied, I can confirm that the legal case against us is without merit and we will respond accordingly. We are confident in our position and have no concerns over the outcome. TD Securities analyst Daniel Chan inquired, John, what changes have been made to the scope of the software-defined vehicle plans and what potential upside do these changes bring? John Chen replied, yes, we attended the Motor Trend event at CES in Vegas earlier this year. It was clear that OEMs are making significant investments in software-defined vehicles. We're being prudent with our estimates and recognize that some delays can occur due to various factors. Several major OEMs have made public announcements of their plans to reorganize and accelerate car release dates driven by software advancements. TD Securities analyst Daniel Chan inquired, what percentage of cybersecurity billings were renewals versus new business? John Chen replied, that's an interesting question. I'm not in possession of the breakdown of the 122. However, I can have Tim follow up with you to provide more detail. TD Securities analyst Daniel Chan inquired, what portion of the growth is organic versus backfilled contracts? John Chen replied, the most significant agreement we secured this quarter was an extension of multiple years and an expansion of our license footprint. Global Equities Research analyst Trip Chowdhury inquired John. Could you explain how Cylance's machine learning models can be applied to Ivy? John Chen replied, we're actively utilizing AI-driven threat hunting services and recently began offering it to customers. We have billions of malware profiles that our machine learning model is built upon. We are in the process of exploring additional AI capabilities for our products, taking care to ensure we do not violate any existing governmental policies. We are currently researching both the product development and policy aspects of this. Global Equities Research Analyst Trip Chowdhury inquired, have you considered using existing machine learning models to automate your battery management systems in order to enhance performance and differentiate yourself from other software-defined vehicle providers? John Chen replied, Trip, our lab team has a good understanding of the topic and will strive to leverage it from a business perspective. We haven't yet dived in too deep, but it's a great idea. CIBC World Markets Analyst Todd Coupland inquired, John, could you discuss the timeline of expected IoT and cyber activity in Q2 and the rest of the year? John Chen replied, Todd, I'm cautious about our quarterly outlook due to the environment. However, our pipeline is strong, particularly with the government deals from the cyber side. We're closely monitoring the development schedules of the OEMs related to the vehicle side. I anticipate Q2 will be better than Q1 and ARR in the cyber side should return to positive sequentially in the second half. CIBC World Markets Analyst Todd Coupland inquired, can you provide an update on the contract extension that's coming up this year? What changes, if any, should investors be aware of? John Chen replied, I'm awaiting the outcome of the Imperium project before deciding how to proceed. I have discussed this with the board and we are confident that it is in good hands. CIBC World Markets Analyst Todd Coupland inquired, would you expect the initial findings of the project to take at least the summer, or can it happen sooner? John Chen replied, I anticipate the separation of our business to take until the end of summer. There are a number of factors involved in this, including the income statement, balance sheet, tax implications, and market considerations. It's a complex process that requires thorough review. John Chen replied, thank you for joining us this evening. I appreciate your commitment to our company in the late hour of this call. I look forward to speaking with you all again at the next quarterly earnings call. Have a good evening.